Bank Nifty, which has seen an astonishing drop, over 1,000 points down now on the Bank Nifty. Let's pull up the components of the Bank Nifty as well. You are seeing a sharp sell-off in ICICI Bank, 3% down right now. I mean, we can keep speaking about how there is no real reason for this kind of a drop, but there's something clearly that is bothering the markets and the street overall, with ICICI Bank as the core sell-off point at this moment. Just looking through the news flow on what could really have alarmed the street, and I just noticed this on it's a Financial Times piece that Bloomberg has picked up, saying Qatar says Gulf may be forced to stop energy export in weeks. So I don't know if that's one of the many things that is coming in, and maybe that's what's spooking people right now. I mean, frankly, it's such a fluid situation. It could be anyone's guess, but on technical levels, definitely we're seeing this sharp sell-off. I'm actually going to go across to Sumit Sarkar, joining in with all the chatter from the dealing room. Sumit, in times of stress, that chatter turns into a whisper. What is going on? What is the primary fear that people are talking about?
Well, there are multiple such chatters that are going around. One of them is also what suggesting that there could be the family offices of Dubai which have been selling their shares in India and bringing in the money back home. That could also be one of the reasons. It's just a chatter. There's no confirmation regarding this. Multiple sovereign offices own a lot of stake in multiple companies in India. So there could be some selling pressure coming in from those side, from that angle as well. That is one of the chatter that is going around. But again, there's no confirmation of the same, or there's no way to check on that. But a few stocks that dealers have highlighted. Firstly, it's Karnataka Bank. Dealers indicate that large, prominent HNIs have been accumulating shares in this counter for the last couple of trading sessions, and despite the sharp fall that we have seen in the banking index and in the market, this bank continues to outperform. It's been up around 7 to 10% odd in the last couple of trading sessions. Second one is Dabur and Marico. Now, there's a paired trade which have been indicated by dealing rooms. They're asking their clients to buy Marico and sell Dabur. They believe that the copra price inflation concerns are largely overdone. But when it comes to Dabur, there could be concerns related to increase in raw material prices and also growth going forward. So sell Dabur and buy Marico is a strategy that dealing rooms are indicating their clients. For IndiaMart, there are buy flows on institutional desk. Delivery volumes are expected to be on the higher side here. For Shriram Finance, similarly, buy flows on the DI desk is seen prominently, is what dealers have indicated. The stock might be down in trade because of the plunge that we have seen in the Nifty, but there are some buy flows coming in on the DI desk. And lastly, when it comes to NTPC, multiple dealing rooms are recommending buy calls to their clients based on technical charts in trade today.
Just absolutely. So quite a few stocks that you should keep on your radar, but the one bucket of stocks that you can't ignore at this moment is the banking pack. And Mayuresh, if you're looking at ICICI Bank with cuts of over 3% at this point specifically, and if you're talking about the price to book trailing right now at about 2.7 times, one would argue that with a lack of anything fundamentally wrong with this bank, it becomes attractive, does it not?
Afternoon, Alex. So yes, I think considering all the information that is going around at this point of time, at some point of time, if the markets do correct further, the bank is coming down with the markets, I think it becomes attractive, no two ways about it. I think the large part of expectations of the market is with the kind of energy crisis that is looming in because of the escalation in the Middle East. There is every hope that inflation across the globe will be on an upswing. Obviously, no more rate cuts, but there is a probability of a rate hike if this probably continues for longer. And therefore, that is the fear that the street is probably working out with. Again, nobody really knows what is going to happen. And therefore, I think if it corrects further, I think these large banks, whether it's ICICI Bank or even State Bank of India from the public sector space, will become attractive.
Kunal, beyond banks, Kunal, where is it that you would be brave enough or whatever, risk-taking enough to take a short trade? Are you initiating a short trade this afternoon for a quick cover on Monday morning?
Yeah, I think yes, definitely. I think IT again still looks weak to me even from the current levels. From the current levels in the last 3 to 4 trading sessions, whatever bounces we have got, even on an intraday perspective, that has been very weak. So clearly indicating the weakness here. So again, IT continues to be on the weaker side, and there the selling momentum can still continue on the downside. So here my focus would be on Infy still looking short at the current levels. The pullback seems to be over, and now we can see further downside coming for Infy as well. So again, IT continues to be the trade on the short side. No need to do bottom fishing at the current levels. We might have some more room downside for the IT index.
You know what's astonishing about what's happening right now is the ferocity of the turns, and this is what we're seeing. We saw this yesterday as well. Could be positions being squared off, people going into this weekend safe. I mean, not everyone owns an Alco-Bev stock, which thanks to the Karnataka government's new policies, some of those stocks were doing well, your Radico, UB, etc. But not everyone owns those. So banks is where people are exiting. Part of what Somit said, and remember, this is the buzz, right? We do not have a confirmation on this, but this is something that smart money is doing perhaps. This is Dubai family offices. Are they exiting? There was a report that NDTV put out about an hour ago saying sirens were sounded in Dubai because those mechanisms are also coming into place. Mayuresh, is the might of family offices based in the Gulf being underestimated by the street right now? We always talk about the Middle East from the point of view of remittances. And we talk about the 97 lakh people there, and we think a lot about that kind of an impact. But the might of Dubai-based family offices and maybe other Gulf country-based family offices and their involvement in Indian equity perhaps has not been understood entirely.
It's a possibility. But again, I think if they have diversified in terms of their global assets, why the sell-off in India, right? The main pain point is Middle East as we speak, and then the countries which we felt were very, very safe, they have probably come under some element of circumspect, as you see. I was seeing your shows yesterday and day before as well. We were discussing whether real estate in Dubai might actually go down quite a bit. So if they're withdrawing from Indian equities or global equities, where are they going to put that money in? I think, I don't know. I don't understand that. But again, not really sure what is happening.
Right. So 1.2% at this moment for the Nifty 50. And Kunal, the sell-off seems to be intensifying for a few of these banks. So let me ask you from a technical standpoint for the private sector banks, and two of the worst hit perhaps, ICICI Bank certainly, HDFC Bank as well. From a technical standpoint, what are the indicators? Are there bases that might be forming at the current levels, or is it too soon to call?
I think no, not at the current levels. Specifically, HDFC Bank has seen a decent correction. So even if you look at the technical indicators, they have gone into the oversold zone. So there could be a bounce. This is what I'll be looking out for, what I mentioned in the start of the show. 57,700, 57,800 is a very crucial level for the markets. That has been the earlier swing low, even on the long-term chart. So if we hold this level, if there's a reversal coming from these levels, then probably these will see some bounce. HDFC Bank, again, is trading in the oversold zone, so that is one bet. But on the flip side, we have ICICI Bank, which has just broken the support on the downside. So probably again there is weakness, there is no confirmation, so no need to do bottom fishing. Probably next week would give us a better idea. If we are able to hold 57,700, 800 on the downside, then probably you might see some momentum coming back, or else Bank Nifty would see further pain on the downside that would drag the index at least towards the mark of 56,500, 56,800 on the downside.
Okay, what is at the starting point of all of this worry is energy supplies, right, for India. So I'm going to go to this site. This site is actually amazing because it shows you, it's called Marine Traffic, and it shows you a live view of what is happening at the Strait of Hormuz. And let's just zoom out a little bit to show you how traffic has moved. Now, over the last few days, you saw a lot of ships this side and at this end. This is pretty much cleared. So now you have ships moving away from the Strait of Hormuz. The green that you're seeing are cargo ships. That's what we have selected right now. And you will see some of them concentrated around this end. The Bandar Abbas is an Iranian port, so no one really wants to come in over here, right? This has become a war zone of types. But if I select what is happening to the tankers, this is where the oil is, remember? And this is what becomes important. The tankers, and you zoom out and you see it, tankers have pretty much cleared up from the Strait of Hormuz. They are all moving in different directions now. And this is what the street has perhaps not understood yet. How exactly is this going to move? What are the other routes that are available? Just look at this map around Doha, Kuwait. This is all of your energy producing countries, right? We just told you about a statement coming in from Qatar about the Gulf countries and how they would manage as well. So you have tankers stuck on this end and that, nobody able to pass through, alternate routes being looked at right now. And this is where some of those pain points come in. Now, this is what we are learning, and this is as per Bloomberg. The concentration of ships at Strait of Hormuz, 44 vessels are right now getting tracked in the Qatar to Hormuz corridor. Out of the total 44 vessels, 28 vessels are moving right now. This is as per this afternoon, while 6 are anchored and stationary in open waters. Why we're telling you about the ones that are getting tracked? Because vessels also have the option of shutting off their GPS, so they can't be tracked. And some might choose to do this right now. So it's going to get a little difficult to really track what's happening entirely. 7 vessels are right now docked at nearby ports, and 91% of vessels are active today. The combined cargo being handled is 3.5 lakh metric tons across all 44 ships that we're talking about. Total fleet capacity at 15.2 lakh dead weight tons that we are speaking about right now. So this is the real picture. And just zoom out once again and show the exact picture. I mean, look at the traffic jam in the seas. It's astonishing. Nothing is moving. And what we are hearing from companies across supply chains, those that make PET bottles, or even those, I mean, we talked about Tata Motors some time ago, the paint companies, everyone is stuck because you have a supply chain which is completely clogged up with concentration of, definitely, of oil tankers which have nowhere to move. This is what's making it so complicated right now. I'm going to go across to Ashish Chaturmota, Managing Director and Fund Manager at Apex PMS JM Financial, to also get a sense of why this panic in the markets. Ashish, there are memes going around about how, yes, it's a panicky situation, but if you compare what Indian markets are doing to even those in Dubai, Israel, the US that are actually in the war, we seem to be the worse off. Why do you think that is?
So, hi. Definitely see there are a lot of, rumors and news flow which is going around. Yesterday, we had seen some positive, news coming in, and the market saw very good recovery. And from morning itself, we are seeing a lot of pressure. And this time, our best quality, space, which is the banking and financials, has seen a lot of pain in today's selling pressure, clearly indicating there's a lot of nervousness at this point of time at a broader level. And but the surprising part is this sell-off which we are witnessing today is mostly into the larger cap names. But if you look at the mid and small space, that's showing a lot of stability today. So my sense is it's more to do with a liquidation kind of pressure which is getting witnessed, but it's not like this is getting reflected into small and mid cap basket. And the interesting part is we have seen obviously these quarterly numbers where the PAT growth of small cap companies have been on the double digit side, and on the top line also has grown very well. So keeping this in mind, I think this is like a situation where some liquidity pressure is going to be seen. We have seen India VIX jumping in the last 2 days, so that is also getting reflected into options pricing data as well. So all in all, we can say that at current juncture, markets are going to be very, very volatile, and the range we are looking is broadly 24,000 on downside to 25,500 on upside.
All right. But by the way, Ashish, even while you were speaking right now, you're seeing the broader markets that are plumbing new depths. You're seeing the mid-cap index now with cuts of about 0.75%. The small-cap index also heading lower. the VIX was playing out on the screen, and this is important to track because the volatility index is also seeing a very sharp spike, now up as much as 11.5% and moving closer to that 20 mark. Kunal, this is when you're heading towards that 20 mark on the VIX, that you got to brace for a significant amount of movement on either end. And so what are the talking points or takeaways that you're taking from that increased volatility just over the course of the last half an hour?
I think definitely India VIX, if you look, the breakout what we had got even in the VIX around 15-16 zone, I think there is still upside left over here for the VIX to go. And now we are getting still further confirmation towards 23, 24 is where we can see the spike going on. So I think, yes, again, the next week is likely to be more volatile. We will see India VIX, even from the current levels, can touch the levels of 23, 24, and what has been already reflecting in the stocks as well. What we have been saying that for Nifty, the last leg is still left, where we expect this to go toward 23,900, which is where from the previous breakout had come in. So I think that is a critical level to watch out for. And for Bank Nifty, as I said, the swing low of the weekly 57,700, 57,800, this is where currently we are trading. This is very important. If on Monday's trading session, we are not able to hold this level, then probably Bank Nifty will be the worst hit, where the decline could go towards 55,000 on the downside.
Okay, so those are the critical levels that you need to watch out for. Bank Nifty, by the way, trading at the low point of the day, down about 2.1%. Now, quite a bit has been already spoken about of what the context is, but one of the factors, and this is something that you saw on the screen just now as well, when you talked about the fact, or Tamanna talked about the fact that so many oil tankers are pretty much stranded in the water. They're not moving right now because that entire Strait of Hormuz region has been vacated completely and alternative routes are being sought. The term force majeure has been used repeatedly over the course of the last 6 days. Now we're talking about the legal implications of that and how this can be enforced when you can use this as well. And to explain that from a legal standpoint, Sanjay Ashar, Senior Partner at Crawford & Bailey, joining us right now. Sanjay, thanks so much as always for taking the time and for speaking to NDTV Profit. The first and the most important question is, when can you enforce this? When can you call for this? Do you have to prove in no uncertain terms that you cannot fulfill a contract and only then can you use force majeure?
There has to be a cause of action, and the cause of action has to be proved. That is number one, the force majeure. That is number one. Number two, but there has to be included in the contract a force majeure clause. And the force majeure clause should specifically say war or warlike condition with the result that the ships cannot move or whatever is the subject matter. It can't be just a force majeure. It has to be force majeure. Very specific clause should be included in the contract between the parties. Then only it can be invoked. And then obviously one has to prove that yes, there was a force majeure event which occurred, and because of that force majeure event, one could not enforce or one could not complete the contract.
So then let me take that question forward. What do you do in the event that you have actually issued a force majeure? Does that invalidate a contract? Does it change the terms of the contract? If, for example, a situation that is ongoing is resolved, then do you go back to the original terms of the contract, adjusting for the event? How does it work?
Yes, for adjusting for the event. Look, if there is a force majeure event because of which you cannot perform your obligations, then you will not be considered in breach of the contract. So that no penalty, no damages, no loss can be stuck on you. So in other words, if there is a force majeure event and if there is a force majeure clause, what happens to the party which is suffering because of the force majeure, it would not be that the party which has not been able to perform would be considered in breach of the contract.
So, Mr. Ashar, very good afternoon. Tamanna here. Just to understand, if X company declares force majeure and says that I cannot provide you the goods and services I was supposed to because there's an act of war or something out of my hands. What are the financial and legal implications? Does that then protect said company from any kind of legal implications or actions from its partners or clients because it's just out of their hands? Is this a protective kind of a move? What are the financial implications? Why do companies do it? What does it really mean for them? Because I think right now a lot of companies are announcing it and investors are trying to understand what its implications are.
Yes, there is absolutely a protection in case a party cannot perform because of a force majeure event, which is there, and the force majeure clause is included in the agreement. So no losses, no claims can stick on that particular party which has not been able to perform because of the force majeure event. I'm not sure if I've answered your question, but what I'm saying is that there cannot be any loss which can be stuck or which can stick on the party which cannot perform because of the force majeure event.
So that clarifies it. Mr. Ashar, just last point, right? Which is, from a legal standpoint, how would you advise a company that is in receipt of a force majeure? Because you're talking about now supply chains that have been disrupted across the board. For example, and this is a hypothetical scenario that I'm presenting to you, an LNG company or Petronet LNG has gotten a force majeure issued to it by Qatar Energy, saying that we can no longer supply LNG to you. What is the legal advice that you would give to the Indian entity in this case?
Yeah, but that means a party which is suffering because of the force majeure, correct?
Yes.
If the party which is suffering because of the force majeure, who cannot deliver the required goods or the required material to the counterparty, in which event, obviously, when the force majeure event has occurred, it has to inform immediately the counterparty with whom it has entered into a contract, explain in detail as to what are the circumstances which are outside their control, and the force majeure event has occurred, and that they would want to invoke the force majeure clause, and that they will not be able to comply with their part of the obligation because of extraneous circumstances and factors which are beyond their control. And they have done all what is required to mitigate them as well.
Sanjay Ashar, thank you so much for joining in and just explaining to us what is the concept of force majeure and how it will apply, because you're going to be hearing, viewers, this term more and more over the next few days as I suppose entities, companies try to grapple with what's happening around them. Well, we're grappling with what's happening in the markets right now, and now you have a 330-point cut on the Nifty. You're just about holding on to the 24,400 mark right now. Nifty IT has wiped out all of its gains. Nifty Bank is looking pretty bloodied, I would say, in this afternoon session. Just look at that line graph, and that chart is telling you the entire story, that big plummet there. Now, a couple of things could have happened, and we really don't want to speculate on what this could be, but I'm also seeing an interview in the Financial Times being quoted, and that interview actually talks about how a Qatar's energy minister has forecast that crude prices could soar to $150 a barrel. This interview is on the Financial Times, so we're just quoting what they have said. And he's saying that crude prices could soar to $150 a barrel in 2 to 3 weeks. Now, if this does happen, of course, it's the worst case scenario, right? That is getting painted. Qatar says Gulf may be forced to stop energy exports in weeks. His energy minister has, for this very reason, talked about that $150 barrel mark. And some parts of that interview to the Financial Times is what you're seeing at the bottom of your screen right now. Now, clearly, think of it this way also. Gulf countries are going to want to press the emergency brakes, right, on this war, because they're the ones at the receiving end. Ashish, I want you to come in on this. If Iran's strategy right now was that let's have those in our neighborhood, the Gulf countries, feel the pain, and then they will raise the alarm, that's exactly what's happening.
Definitely, that's exactly what is happening, and it is creating a lot of nervousness in the entire Middle East, and that's how they are going to, try to be the first one to get this matter resolved, rather than Iran coming in front, and that's where I think market is very, very much worried about the way crude is going up, and this is also getting reflected into one very interesting data point, how the dollar index is shaping. You see how dollar index is gaining strength in this extreme uncertain environment. The reason is the flight to safety has started taking place, and that's where the hedge against this strong geopolitical risk is getting reflected into the move of dollar index. And at the same time, crude prices have shown a very, very strong resilience. So keeping this in mind, and see today also, if you look at most of our defense sector and space is showing such a good rally, clearly indicating that this volatility is going to continue and people are going to shift their focus on the industrial metals, commodities, hard assets, and the rally on the dollar index might continue. So these are some broader themes which markets are anticipating at the current juncture. And we have also advised our clients or investors to have some kind of hedge in the portfolio at current juncture. So this hedge could be in the form of creating cash, or might even buy Nifty puts to protect the downside against the drawdown in the portfolios.
Okay, I am very hesitantly, Kunal, asking you for, I'm not even going to say BTST, ideas for Monday. Is it sell today and what you can't sell on Monday? Or is it, I am sure things will improve, let's look at buying? How are you looking at it?
Yeah, I think Tamana, definitely doesn't look like things are likely to improve even on Monday. As I mentioned for Nifty, we are at the last leg. What we are talking about is still left, that is 23,900, 800 zone, which is the next support zone for the markets. So that is where we still have from the current levels more 400, 500 points downside left over here. So today the beating has been from the financial space as well. So here again, I would like to go on the short side with Chola Finance. Already the stock has been showing a weak trend from the high levels. There has been negative divergence, there has been negative crossover, and now we have reached the recent bounce back, what we got from 1628, 1630 on the downside. So I think here still more selling pressure is visible for the stock. So that's a sell for me as an STBT. And one can see targets of at least close to 1580, 1550 on the downside, with a stop loss of on the upside towards 1670.
At this moment, it seems like a lot of people in India are saying that they don't want the tension of holding a portfolio that could see sharp cuts ahead of the match on Sunday. They have enough tension to worry about with India playing a final, and they're saying take
Why are they betting on the match
table.
instead? I mean, I don't. No, okay. Can I say something? I don't want to be just saying this for the sake of it, but frankly, is there a need to panic so much for Indian investors? Honestly, is there a need to panic so much?
I don't think so.
You are the only nation, one of the few nations who Iran wants to give safe passage to, who America wants to, help out and ease your energy issues as well. Russia wants to trade with us. You're the only one there. Yeah. And yes, you're dependent on oil, but so what? I think things will have a way of working themselves out.
So that is ultimately the question. And all of those scenario building that we did just a short while back, the problem is that if crude goes above 100, then all of those question marks that you had about interest rates falling go out of the window. Instead, you're talking about them going up.
We've been at 100 before.
Yeah.
We've been at 100 before, and it'll be 100 for everyone.
Yeah.
Not just for us. So we'll have to see. All right. Shrimi Chaudhary joining in with more details of that key meet that the shipping secretary has chaired with stakeholders. Shrimi, does there seem to be a clear plan of how Indian shipping industry will be seen through this crisis?
Yeah, absolutely, Tamanna. This was a very, very crucial meeting indeed, because the shipping ministry heard all the stakeholders' concerns, right from the OMCs, your steel companies, refiners to exporter, everybody they heard. And the most important point, they kind of underlined that see this situation as national interest and not something like which is commercial in nature. So that's very key point mentioned by the government to all stakeholders. Now, some of the points are noteworthy here, and I'm starting with the HPCL point. They said that 2 LPG and 2 crude vessels has been stranded in that Gulf region. And why that is challenging? Because many more are actually awaiting for the clarity, and that is posing a risk clearly on the inventories, because we have the limited supply is the kind of indication HPCL has flagged in that crucial meeting. Second important point, and this is from the point of view that we reported on the fact that 37 Indian flagged vessels has been stranded in the Gulf region with both West and East region, and out of that HPCL Shipping Corporation of India among vessels are stranded there. And the currently situation we are in, the crude inventories, what the government sources told us that we have 50 days of inventory. So this is coming at a point where they are raising the concern on the inventories, the limited supply they are talking about. The second important point where the Reliance industry has raised on the fact of how to ensure sourcing of Russian cargo, because there are some stringent licensing norm which they are seeking to have some relief on, because they are facing a lot of disruption on getting that passage of Russian crude cargo. So that is also very noteworthy coming from the Reliance industry representative which were present in that meeting. And apart from that, all the procedural issue, right from your insurance, your freight cost, etc., they are in touch with all the concerned ministry. For example, for custom clearance, how to facilitate that there shouldn't be any disruption there, how to ensure back and forth of ports, all they are in touch with the major ports. They're ensuring that there shouldn't be any sort of disruption from the Indian side. Apart from that, they are meeting with all ministers and doing interministerial consultation as well. So very, very crucial meeting, and we need to see how this will pan out, Tamanna.
Thank you for that, Shrimi. In case you're wondering where Shrimi and Rishabh were reporting from, where that beautiful painting is, that's the National Media Center in the capital, where all journalists gather to report after they speak to various ministries. All right, 2 minutes, 10 seconds to go. And I mean, if you want to take any relief from the fact that you're not maybe ending at the day's low, maybe that's all you can do. 300
Inching up
points
just
down.
a tad bit.
Just a tad. At least you won't be 300 points plus down, but definitely key levels have been smashed through today. And in the closing 20 odd minutes or so, the Nifty heat map will show you the extent of pain that we have been seeing, and across the board, really it has been. ICICI Bank, I would say, has been punished today, and it's probably a variety of things. If you want to exit key positions, maybe you will do it where your biggest holdings are. Some of the theories are that large sovereign funds in the Gulf, maybe family offices in the Gulf, want to go into cash right now. Remember, they're the ones in crisis. So that's perhaps what you're seeing. And
just
that could explain Eternal as well.
Yeah, and just at the last line, right? You have HDFC Bank, Bajaj Finserv, SBI, Axis Bank, all frontline banks are getting sold into. State Bank of India as well, down about 2.4%.
Actually, we should look at the Bank Nifty. Maybe Bank Nifty is the bigger story than the Nifty
it is, certainly
this
is
afternoon.
Today.
And the Bank, look at that. The Bank Nifty down over 1,200 points, 2.5% nearly, is the story of the afternoon. I want to pull up the components of the Bank Nifty, and it's not just ICICI Bank. Financials themselves are in melting mode. Punjab National Bank, State Bank of India with that 2.5% knock. All across the board, you're seeing that pain coming in. The advanced decline ratio will also tell you that this is an across the board kind of situation. Through the day, it seemed like it was pretty much the Nifty which was hurting and everything else was fine. Look at this. These are sell calls pouring in right at the end. And those statistics tell you the whole story. Okay, maybe this is when you say TGIF.
Yeah.
Thank God there's a match to look forward to.
I'm certainly happy that this day is getting over.
And thank God the markets have closed, because more time open would have been perhaps more carnage in this mood.
Yeah.
The broader markets is what I just want to quickly look at before we go forward as well. And then maybe, Alex, you want to talk about what's happened through the week, because the mid-cap 150 also completely, after staying okay through most of the day, dumping down. And the small-cap index, we'll just look at the small-cap index as well, seeing those sharp cuts.
Yeah, you know, it's been a topsy-turvy week, and obviously because so much in the way of geopolitics has taken place. Pull up the weekly chart for the Nifty 50, and remember that this is a week that also saw one day of a break, right? So you've actually seen a situation where you're down about 1.2%. You saw a brief rally, and that has been sold into pretty
1.2% is today. For the week, you're down nearly 4%.
Yeah, so 4%
with
for the week. Yeah,
in 4 trading days.
There you go. So 4%. You saw a brief rally, but that got sold into as well. Pull up the mid-cap and the small-cap index as well. And just to drive home the point, the broader markets actually seemed just a tad bit resilient at the start today, but that didn't hold true, and that got sold into as well. Similar cuts, about 4% for the mid-cap index. Pull up the small-cap index just to look at that, and again, you have 3.4% or thereabouts. I'd be curious to look at the bank Nifty as well, because this is where the story is at the end of the week, in those frontline banks being sold into 5% cuts. This is the story heading into the start of next week, whether there are opportunities on the fundamentals, because I know of at least one individual who speaks to us every day in the morning who will thump the table and say there is nothing fundamentally wrong with Indian banks and you should go out and buy them.
You're either thumping the table or you're thumping your forehead right now. It could be one of the two. Hopefully it's the table that you would want to thump at least next week. What's the outlook looking like going into next week? Frankly, it's anybody's guess. Hopefully you will see some kind of a recovery from these levels. Technically, we're definitely there. In terms of valuations, we're definitely there. But then, you know, you have a situation that the Gulf sees bombardment and the Nifty quakes. So I would say keep your worries aside for now. Markets have closed. Let's hope for a better Monday coming in. From Alex and me, that's all the time we have, and from the team that put this show together.
Forget about markets for a little while. Think about the finals on Sunday. Enjoy the weekend. Thanks so much for tuning in. From Tamanna and myself and the team that put the show together, thanks so much for watching. Stay tuned. This is NDTV Profit.
NDTV Profit women, building their own power. From server room code to the studio's final hour. Fire in her eyes, numbers don't lie. From the PCR to sales floors, watch the targets fly. Don't call it empowerment, that's just talk. This is work, this is grit, this is the walk. No handouts, no favors, no borrowed tone. She built her own damn throne. NDTV Profit for her profit.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Good evening, you're watching Market Express with me, Shreyanti Singh, and this is the show that gets you a snapshot of everything that is happening in the markets as well as headlines that you should be looking at this hour. But before we do that, first things first, let's take a look at the markets. It was a weak day of trade on Dalal Street as market erased yesterday's positive momentum. You do have profit booking that you saw in benchmarks with Nifty and Sensex, both witnessing a sharp fall. When you talk about the last hour of trade particularly, now volatility really remained heightened as India VIX spiked over 10% to near that 20 level as well. With that in mind, let's also quickly take a look at the sectoral picture as well, because you do have majority of key sectors that ended on the weak note led by financials and banking stocks. Now, when you talk about Nifty Finance and Nifty Bank as well, those are your top sectoral losers today, led by realty counters as well. And you do have, on the flip side, on the gaining side, defense stocks that were continuing to witness a strong buying interest. And this is amid the Middle East war fears. We'll keep getting you some more updates when it comes to this particular development as well. And speaking of those updates, let's talk about the Iran-US-Israel conflict that has entered its 7th day as well, with no signs of de-escalation. You do have residents of Dubai that have received an Emirati Interior Ministry alert on their phones, also urging them to shelter from potential missile threats. Now, at the same time, Saudi Arabia's defense ministry, in fact, has said that its air defense systems intercepted 3 ballistic missiles targeting the Prince Sultan Air Base as well. And the second major attempt in recent days is something that you're seeing right now when you talk about Bahrain as well. 2 hotels and a residential tower in Manama were hit in Iran's latest wave of strikes, causing material damage but no casualties, fortunately. You do have Iran that continues launching drones and missiles across the region in retaliation for sustained US and Israeli strikes, keeping Gulf states really on high alert at this point in time. Moving on, that the United States has granted India a 30-day waiver to continue purchasing Russian oil as the escalating Iran-US-Israel conflict really disrupts global energy flows and also pushes crude prices higher. The temporary exemption allows India to lift Russian cargoes that are currently stranded at sea, ensuring continuity when it comes to supplies at a time when the Strait of Hormuz remains effectively closed. Now, this particular waiver comes as Washington tries to balance its strategic interests, maintaining pressure on Russia while preventing a global energy shock triggered by the Middle East war as well. Let's also move on and get you an update going as far as traffic at the Strait of Hormuz is concerned. That remains heavily concentrated today as well, with 44 vessels tracked in Qatar to Hormuz corridor. And you do have activity levels that are still high, with about 91% of the fleet moving Even as tensions linger in the region, a combined 3.5 lakh metric tons of cargo is currently being handled across these ships, with total fleet capacity standing at 15.2 lakh deadweight tons. You do have maritime agencies that are cautioning that some dark vessels may not appear on tracking systems, as ships can voluntarily switch off their transponders as well. So that's a little bit of an update that you have coming in. But as of now, yes, it is a paralysis coming in on the back of the war, but a bunch of vessels still remain operational. And oil then is roaring into the weekend with an explosive weekly gain of more than 18%, supercharged by the widening US-Israel-Iran conflict and the near paralysis of tanker traffic around the Strait of Hormuz. The iota of global energy flows as well, now carrying roughly a fifth of the world's oil. That should give you a little bit of a background coming in on the Strait of Hormuz. Now, WTI and Brent both surged after strikes on Iranian assets triggered retaliation. And this is across the Middle East, raising fears of prolonged supply shock as well. So that's something that you're keeping on your radar as well. And with major producers scrambling to stabilize output, and also analysts really warning of a possible march towards $100 oil, you do have the market's message that is clear right now, which is that geopolitics and not fundamentals are going to be holding the wheel. With that in mind, let's also talk to you about gold prices, which surged toward $5,400 earlier in the week as the Iran conflict deepened. It's now heading for a surprise weekly loss, though, which is why we're talking about it right now. You do have the markets recalibrating at this point in time, and this is after swinging sharply between somewhere close to $5,100 an ounce to about $5,300 an ounce in terms of those levels coming in for bullion that saw a midweek rebound, but a powerful dollar-driven sell-off ultimately clipped safe haven momentum as well. Even as geopolitical tensions widened and safe haven demand really stayed firm, you do have traders shifting focus to currency strength as well as shifting rate expectations, pulling gold off its highs. What began really as a classic flight to safety rally is now morphed into a week of volatility that you saw coming in thus far, gold slipping into the red despite the chaos that first powered its surge. Moving on, then, Tata Motors' Sanand plant is staring at a major production disruption after Gujarat Gas slashed supply by 50% amid the Middle East-led LNG shortage. Officials, in fact, say that paint operations are the first casualty, since the facility uses natural gas for the entire painting process, making it impossible, in fact, to store unpainted cars. With 4 lines capable of producing 4.5 lakh vehicles a year, sources in fact are warning that the company is going to be forced to idle up to 2 lines if the gas crunch persists. Now, the industry fears wider ripple effects at this point in time, as several Gujarat units also face identical supply cuts. Let's also talk to you about some brokerage notes right now, because you do have UBS that is staying positive on Indigo and keeping its buy call, but cutting the target as well to about 5,500 rupees as well. And the brokerage also says that the ongoing conflict could affect airline capacity when it comes to the near term. When you talk about this particular counter, it was down and out in trade today as well, about a 2.5% knock coming in. When you talk about this particular counter, and higher crude prices in fact add to earnings pressure, and a weaker rupee against the dollar remains a key medium-term headwind. Now, UBS, in fact, is also noting that overall sensitives for the sector also remain elevated. Let's also talk to you about UBS initiating coverage when it comes to Pine Labs with a buy and a target of about 250 rupees as well. About a 1.5% uptick is what you saw coming in when it comes to this particular counter. And the brokerage, in fact, says that the company is scaling up EMI monetization across its platforms, continues to lead in B2B payments for large enterprises. Now, in terms of some of their other highlights, they're talking about how the company has a strong annuity-style revenue base, scalable monetization model, and improving margins as well. It also adds that affordability products also remain a key driver of incremental growth when it comes to this particular counter. Let's also talk to you about Garden Reach Shipbuilders that has signed an MOU with Kalyani Strategic Systems to develop advanced defense technologies. Now, the partnership focuses on next-generation naval systems, unmanned platforms, and also enhanced maritime capabilities. Now, this particular collaboration, when you talk about the management commentary also coming in, they're talking about how this is strengthening India's push for indigenous defense manufacturing and also improving future readiness for the Navy as well. Let's also talk to you about DCX Systems that was in focus and buzzing away in trade on the back of securing an order worth about 68 crore rupees from HAL. Now, the contract is for the manufacture and supply of custom-built antennas and power supply units. And when you talk about this particular company, it's saying that the order strengthens its position in defense electronics and adds to its growing pipeline of high-value projects for large state-run aerospace clients. And moving on then, let's talk about Citi starting coverage when it comes to something like an Okla India with a buy rating and a target price of about 750 rupees. Now, the brokerage says that the company has strong leadership in spices and convenience foods and is well placed to benefit as these categories formalize. Now, when you talk about some of their other highlights, they're talking about how the company has a powerful brand, steady expansion into new products, and a wider distribution network as well. And it's also seeing room for growth through international markets and potential acquisitions. Let's also keep getting you the word coming in from brokerages, a bunch of brokerage notes that we're looking at today, because you do have Investec also keeping its buy call when it comes to something like a Petronet LNG. Also saying that the recent correction right now looks overdone. The brokerage also notes that Middle East tensions and force majeure events may create some supply concerns, but the downside impact is already measured. Petronet, in fact, now trades at attractive valuations with a healthy dividend yield. And Investec also believes that fundamentals at this point in time are strengthening, keeping the stock among its top picks. Moving on then, Kotak keeps a reduced rating when it comes to something like a Persistent Systems with a target price of about 4,600 rupees. The brokerage says that Persistent is well placed to benefit from the fast rise of Gen AI, as many enterprises understand what AI can do, but still struggle to be putting it into practice. Now, in terms of other commentary coming in from the brokerage, they're pointing out that the toughest part is the last mile, building platforms, guardrails, and even verification layers on top of the large language models that already exist. Now, that is where system integrators are crucial and where Persistent has a clear strength. In fact, the valuation, however, stays unchanged. Let's also talk to you about Fractal Analytics that has posted a strong third quarter with revenue, profit and margins improving on a sequential basis. A tax write-back boosts margins and the company delivers steady constant currency growth. Fractal, in fact, adds new large clients, showing firm enterprise traction. The Americas lead the revenue mix, with Europe and APAC also stable. Now, when you talk about the net revenue retention, that is remaining strong, pointing to solid client expansion. Let's also shift the focus back to brokerages, because in fact UBS is saying that banks could face pressure if oil prices rise as higher inflation may hurt consumption and credit demand. The brokerage outlines two scenarios. So on one side you have a mild rise in crude that has a limited impact when it comes to earnings, while a sharper increase could actually drag profitability more meaningfully. In fact, when you talk about some of their other takeaways also, they're talking about how the mid-sized private banks and state-owned lenders are more sensitive to this risk when compared with larger private banks. In fact, Axis Bank and Kotak Mahindra Bank remain their preferred picks at this point in time, alongside buy calls also coming in on some of the other heavyweight banks as well. So something like an ICICI Bank, HDFC Bank, even Bank of Baroda and Canara Bank make it to their radar as well. Moving on then, Shyam Metallics reports steady growth across key product categories in the month of February. Stainless steel volumes rise 3%, while aluminium foil sees a stronger 13% increase. Pellet and sponge iron sales also show robust expansion, with both registering somewhere close to a double-digit growth. In fact, the company is also reporting higher carbon steel and specialty alloy sales, signaling firm demand across its product mix. Let's move on and get you the word coming in as far as the India's shipping secretary is concerned. They've chaired a high-level meeting as oil and cargo flows through the Gulf face fresh turmoil amid the Iran conflict. So you're talking about HPCL, RIL, SAIL and other stakeholders flagging disruptions when it comes to their crude and LPG vessels. and also warning of inventory stress if maritime flows remain constricted for a long time. HPCL has indicated limited inventory, while RIL has also sought easing of licensing norms to also really help source Russian cargo at this point in time. Now, exporters have asked for waiver of detention charges for customs cleared goods stuck at ports, and also flagged piracy risks and the urgent need for war risk cover for Gulf operations. Now, in terms of something else as well, when it comes to this particular meeting, the government has urged all parties to prioritize national interest, and it's going to be issuing uniform instructions when it comes to major ports to also assist Indian cargo ships. Moving on, then, sources are saying that the Ministry of Railways is considering a merger between IRCON International and Rail Vikas Nigam, potentially creating a larger infrastructure powerhouse. But IRCON has issued a sharp clarification, telling exchanges that it is not in any talks for a merger and has no information supporting the market speculation. Now, sources in fact are saying that the Railway Board has even asked the PESB to hold off on selecting a new IRCON CMD, also adding to the intrigue around a possible consolidation move. Moving on, then, air conditioner prices are set to rise across the country, with channel checks also confirming that LG and Hitachi have already hiked prices by somewhere close to 5 to 7% this month. Other major players, Blue Star, Voltas, Lloyds, and in fact several more are expected to follow with price revisions as well in the next 3 to 10 days. Companies are passing on a sharp rise when it comes to input costs, driven by supply chain disruptions linked to the Middle East conflict, and a surge in copper prices is something that you're looking at as well, and a weak rupee raising the cost of imported components. New energy efficiency norms have also added to production costs, and this is something that comes after AC prices had fallen in the month of September following the GST cut from 28% to 18%. And moving on, then, in a major development, the Securities and Exchange Board of India, or SEBI, has collected an enormous 1.7 terabytes of email data from IndusInd Bank as part of an ongoing investigation, according to a fresh order by the Securities Appellate Tribunal. The trove includes, in fact, emails exchanged with brokerages, also pulled under summons issued by SEBI in connection with an alleged market-linked matter. The bank, in fact, has argued that the regulator's demands were excessive and breached privacy norms, but SEBI has maintained that the information sought was essential to establish communication trails. Moving on, then, in a first-of-its-kind move, the Pentagon has formally designated AI firm Anthropic as a supply chain risk. This is a label that was historically reserved for foreign adversaries, with the escalation, in fact, follows weeks of stalled negotiations over Anthropic's refusal to allow its AI models to be used for mass domestic surveillance or fully autonomous weapons as well. You do have guardrails that the company is insisting that are essential at this point in time, and also tensions really exploding after President Trump publicly ordered all federal agencies to stop using Anthropic and declaring that the government is not going to be doing business with them again. In fact, you do have Defense Secretary Pete Hegseth also saying and confirming that the designation was effective immediately, meaning that contractors working with the US military may now be barred from any commercial activity with the AI firm. Now, when you talk about Anthropic, they were blindsided by this particular announcement, saying that the move is legally unsound and also pledging to challenge it in court. Microsoft as well has come out in defiance, and they're saying that their lawyers have gone through these documents. Something else that they're adding is that they're going to be continuing to do business when it comes to Anthropic. Moving on, then, the Enforcement Directorate has launched coordinated raids across 10 to 12 locations in Mumbai and Hyderabad, targeting businesses and individuals linked to Anil Ambani and Reliance Power as part of a widening money laundering probe. In fact, around 15 specialized ED teams began searches at dawn, also focusing on offices and residences connected to the power utility. You do have this particular action that follows last month's provisional attachment of Ambani's luxury Mumbai home abode, valued at somewhere close to about 3,700 crore, tied to the 40,000 crore Reliance Communications bank fraud case. Reliance Power, however, has stated that no raids have taken place at its offices. Moving on then, a Sukhoi fighter jet of the Indian Air Force that went missing after takeoff has crashed in Assam's Karbi district as well, and you do have this particular aircraft that was on a routine training mission when contact was lost shortly after departing from the Jorhat Air Base. Search teams are now in the area and efforts are underway to locate the pilots. Local residents reported hearing a loud explosion, and the IAF has confirmed that a full search and rescue operation is in progress. Moving on then, Sri Lanka has taken control of a second Iranian naval vessel just a day after a US submarine sank an Iranian warship off its southern coast. In fact, authorities are saying that more than 200 sailors from the ship were evacuated for safety, with Colombo also stressing that it is staying neutral at this point in time but acting on humanitarian grounds. Now, the vessel is being moved to an alternate location right now amid fears it could be targeted next as the regional conflict really spills into the Indian Ocean at this point in time. Moving on, the government has announced a ban on social media access for children under the age of 16. The communications minister says that accounts belonging to minors on platforms like YouTube, TikTok, Instagram and Facebook will begin to be deactivated later this month. The move comes amid growing concerns over online addiction, cyberbullying and also harmful content. Now, authorities are saying that the ban is going to be rolled out in stages and is aimed at creating a safer digital space when it comes to young users. And on to some news for sports fans then. India have edged past England in a breathtaking high-scoring semi-final at the Wankhede Stadium to storm into the T20 World Cup final. Now, Sanju Samson's explosive knock set up a massive total before India's bowlers held their nerve in the final overs to seal that 7-run win. Now, England in fact has pushed hard, led by a superb century from Bethel as well, but fell just short in a record run. You do have India now facing New Zealand in Sunday's title clash, and that's something that we're all watching out for with bated breath. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
NDTV Profit women, building their own power. From server room code to the studio's final hour. Fire in her eyes, numbers don't lie. From the PCR to sales floors, watch the targets fly. Don't call it empowerment, that's just talk. This is work, this is grit, this is the walk. No handouts, no favors, no borrowed tone. She built her own damn throne. NDTV Profit for her profit.
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी, jingle, 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 jingle. बस आज का jingle, 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 jingle. चल करें थोड़े single, 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 single. क्योंकि तू है single, 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 single.
Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we...
Market ends the week over 2.5% lower. Nifty touches its weekly low at 24,305 mark. All sectors barring Nifty Pharma and Nifty Defense end in the red for the week. US grants India 30-day waiver allowing Indian refiners to purchase Russian oil. Treasury Secretary of the US Scott Bessent says this short-term measure will not provide significant financial benefit to the Russian government. Crude slips for the first time in the last 6 days. Shipping Secretary chairs a key meeting as stakeholders, including HPCL, Reliance and SAIL, flag cargo disruptions, seafarer risks amid Iran conflict. Exports seek waiver of detention charges for custom-cleared goods that are stuck at the ports. Iran's war with US and Israel enters its 7th day with no signs of de-escalation. Iran's Deputy Foreign Minister Saeed Khatibzadeh Iran has not yet closed the Strait of Hormuz. The nation will announce it if it's planning to. Railway Minister mulls the merger of Navratna PSUs RVNL and IRCON. Sources say that this merger has a potential to create a larger and more powerful railways infra player. IRCON clarifies it's not engaged in any talks of potential merger. Nykaa CEO Falguni Nair believes the company's fashion business is set to break even soon. Tells NDTV Profit that the company has seen a significant improvement in profitability matrices, particularly at the EBITDA level. In a big boost for alcohol industry, Karnataka government deregulates the liquor pricing in the state, removes slab-based controls in a move to reduce disruptions. Hello and welcome. You've joined us on Profit 360 on NDTV Profit, and I'm your host Nisha Poddar. Along the next half an hour, we'll bring you the latest on markets as well as national and international news for your use. Now, first, let's begin with the market. Indian markets had a tough week this particular week, and the Nifty closed in the red, down more than 2.5%. IT hit a weekly low just above. It also hit a weekly low just above the 24,300 odd mark. When it comes to Nifty 50, remember, which is a lower level, and the erosion in the market caps have been seen across the board. In the Nifty 50, remember, Tata Motors passenger vehicle and Interglobe Aviation fell the most, and both dropping over 8%. In fact, the broader markets did worse than the benchmarks, and Nifty mid-cap 150 as well as the small-cap 250 also ended lower, each down over 2.5%. So it was a broad-based weakness and sell-off that was really seen. Let's take it straight across to my colleague Jasmeet for the overall market roundup. Tell us, Jasmeet.
Well, thank you for that. The markets end in red today. They are down about 1% in today's trade, and Nifty closes above the 24,450 mark. let's quickly understand the weekly image as the markets were under pressure during the week as well. While Nifty ends in red, down about 2.5% in this particular week, while Tata Motors and Interglobe fell the most down in Nifty 50, down about 8% in this particular week, seeing the pressure on the back of the overall global tensions. If you look at the broader market, they underperformed the benchmark, while mid-cap 150 and small-cap 250 also ends in red, down about 2.5% each. Now, if you look at what fell the most in mid-cap 150, that's Petronet and RVNL saw the major fall in mid-cap 150, down about 9% for the particular week, while Netweb Tech and MGL fell the most in small-cap 250 for this particular week. If you look at the sectors, all sectors end in red, barring Nifty Pharma, which ends flattish, and Nifty Defense for this particular week. While Nifty Defense is a top sectorial loser, while if you look at the overall sector is up 4.5%, the Nifty Defense did see a lot of buzz on the back of the global war. That's why it was trading in green this particular week. While Sun Pharma and Abbott gains the most in Nifty Pharma, both up about 3%. While Nifty PSU Bank falls the most for the particular week, down about 6%. If you look at the key trends, Nifty Pharma ends in green for the 5th consecutive week, while Nifty PSU Bank snaps its 4-week of gaining streak in this particular week. While Nifty Financial Services, Nifty Bank and Nifty FMCG fall for 2nd consecutive week in this particular week, what we saw coming today. While further Nifty Realty falls for the 4th consecutive week, and Nifty IT again falls for the 5th consecutive week, saw a lot of pressure on the back of that new AI inventions as well. All in all, we do see markets under pressure in this week.
All right, Jasmeet, thanks so much for getting us the full roundup of the market picture. And yes, markets getting impacted because of the geopolitical tensions. Now, at any point in time, equity markets is the best place for an investor to really compound their wealth. This is the view coming in from Prashant Khemka, who's the founder of White Oak Capital, and he stands undeterred despite the visible volatility in the stock markets. In our conversation earlier today, he expressed the confidence in equities in a manner that transcends the impact of geopolitical disturbances. Let's listen in.
I'm always constructive. I'm consistently or permanently constructive, in that I believe at any point in time that equity markets are the best place for an investor to compound their capital. And that is no different at this point in time. And hardly do I remember, I don't remember any point in time that I would have held a different opinion. Obviously would have been wrong a lot of the times at the start of any market crisis would have been wrong, but then also would have served me well at the bottom of those crises, and nobody can predict either of them.
Now, as the Iran war really continues to interrupt global energy supply chains, well, oil prices are acting mercurial. While Brent crude is hovering around $85 per barrel, well, the US WTI is hovering above $82 per barrel. Now, prices simmered down briefly after Trump issued a 30-day waiver to India for buying Russian oil. Now, the US government has also hinted at taking steps to curb rising oil prices. This includes, remember, offering political risk insurance for tankers transiting the Gulf. Now, in a post on X, the US Treasury Secretary Scott Bessent also clarified that a 30-day waiver to Indian refiners will not provide a significant financial benefit to the Russian government, as it only authorizes transactions involving the oil already stranded at the sea. Now, he further wrote that they fully anticipate New Delhi to really ramp up purchases of US oil, but experts also reckon that if tankers don't resume traveling through the Strait of Hormuz soon, well, the Persian Gulf producers will have to shut down more oil production, pushing prices even higher. Remember that oil import bill is the single largest concern here for India. Now, but how exactly will this temporary 30-day waiver impact the oil refiners and the marketing companies? My colleague Somit is here to share the full picture on this particular aspect. Somit.
This 30-day waiver that India has got, this will be definitely positive
for the supplies that were currently halted. Now, what does this do? It will address the current issue on crude availability. There were a lot of supply issues, so that gets addressed. But this does not mean that Indian oil marketing companies or oil refining companies will be able to refine oil at a profitable level. Now, if you look at Brent crude, it continues to trade around the $83 per barrel mark as against $71 per barrel that we had seen a week ago. Now, the financial impact would completely depend on whether this Russian crude is bought at a discount or not. Now, before the war started, Russian crude was available at a discount of close to $12.4 per barrel as against $2.5 per barrel that we had seen in November 2025. Now, this discount had widened largely because India had stopped importing Russian crude, because of which this discount had increased. But right now, given the current situation, it doesn't seem that this crude might be available at a discount. In fact, it might be available at a premium as well. Now, let's look at the current status of the oil refiners and the oil marketing companies. Now, on the refining side, firstly, if you look at the Singapore gross refining margin, that is trading at around Singapore gross refining margin and the Indian gross refining margin. Both are trading around $23 to $24 per barrel, which is quite high compared to what the previous average. In fact, in 2025, it used to trade around $6 to $7 per barrel mark, and currently is trading at around $23 to $24 per barrel mark. And this is quite positive for pure play or companies that have more refining in their business. That is Reliance Industries, MRPL, and Chennai Petro. When it comes to the marketing segment, where we focus on the oil marketing companies like IOCL, BPCL and HPCL, the gross marketing margin on petrol and diesel is negative 20 rupees per litre. Now, before the war started, it was positive 2.2 or 2.5 rupees per litre. But given the fact that crude prices have increased by around $12 per barrel and also rupee has depreciated, both these factors have led the gross marketing margin into deep negative territory of 20 rupees per litre. And if going forward, this will be negative for all the oil marketing companies, that is IOCL, BPCL and HPCL. Now, this can be only positive if the Russian crude is available at a discount, but if, the chances of the same is very less likely at this moment. And even if the crude supplies come in, the financial impact on IOCL, BPCL and HPCL is much likely to be on the negative side.
All right, thanks Amit for getting us all those important details. Now, the top government sources have told NDTV Profit that India is in a strong and comfortable position for the energy needs right now. In fact, refiners like MRPL have enough crude oil stocks and are well supplied. This comes in the backdrop of an important directive by the Petroleum Ministry that asked India's oil marketing companies to prioritize the domestic LPG supply. Let's get in my colleague Danish, who's getting us more details on this particular bit on our energy conservation and requirement. Danish, tell us.
Well, that's correct. Top government sources have told NDTV Profit that as far as news around MRPL shutting down its business is incorrect, and they have clarified that MRPL and the other refineries, they have enough crude availability with them. So the refining will keep on happening. Besides that, on the LNG front, the government clarified that there is enough LNG available with India at the moment. And if we look at the situation at the Strait of Hormuz, from Strait of Hormuz, only 30% of the LNG was coming, and the government has already diversified and it is sourcing LNG from other countries and from other partners as well. And for that, the government is in a very comfortable position. But earlier in the day, one major update had come from the ministry in which it had asked the refiners for LPG production, and they said that the propane and the butane gas, these have to be used for domestic LPG production only. They clearly directed the refiners that they cannot be sending the LPG for any other commercial use or for any other petrochemical use, because they want that there should be no kind of an anxiety among the public as far as LPG is concerned. So India is in a very comfortable position as far as LPG, CNG, petrol and diesel products are concerned. We have ample amount of stock. In fact, every day the stock is also being replenished. Besides this, as far as LNG is concerned, we know that what has happened in Qatar, and Qatar holds 20% of the whole world's gas production, and because of that, there was a little bit of scare among different people around the world. But now the government has already diversified and they are sourcing LNG also from US. In fact, from January this year, 10% of the LNG is being sourced from the US. So we are at a very comfortable position in all fronts, and the stock of crude is concerned, it is available for good 50 days of both products as well as for crude.
All right, Danesh, thanks so much for giving us those important details. Of course, energy security is paramount for our country currently. Also remember, India's shipping secretary chaired an important meeting today where the key stakeholders like HPCL, RIL, SAIL and others raised serious concerns. They warned of major disruptions to crude and LPG vessels, which could lead to low inventory levels if the situation continues. In fact, freight rates have shot up many times over because of higher insurance premiums. In fact, my colleague Rishabh Bhatnagar joins us with exclusive details on what transpired at the meeting and how is this situation going to be contained. Rishabh.
Right, key details have emerged from a very important meeting that was headed by the Secretary of Shipping in the Government of India, whereas industry leaders, you had the likes of OMCs, including HPCL, BPCL also attend that meeting. You had the industry led by Reliance also a part of that meeting, apart from a bunch of exporters that had joined. Few key points to be highlighted. Number one was, of course, HPCL has flagged that it is facing limited inventory at this point in time. There are two fully loaded LPG as well as crude oil vessels that are stuck in the region currently, and they are sort of asking for safe passage for that as well. What Reliance Industries is seeking for is a certain easing in licensing norms, and this is to smoothen over the idea for when they will need to sort of also pick up Russian cargo from that region, given the fact that there are inventory issues and, of course, a trade flow issue in that region currently. Apart from that, there were also highlights around the sort of insurance premiums that have surged due to the war. So the government has spoken to various insurance as well as reinsurance companies on that front as well. You have also the ECGC that has been asked to not increase insurance premiums during this while. So the government going out on all sort of footings to prevent any sort of adverse impact on exporters. What we're picking up also is the waiver of detention charges that exporters have flagged, given the fact that there are a lot of goods that have cleared customs but are still stuck at port because they cannot be going, because no shipping company is willing to go towards that region right now. What we have also is at around evening today, you'll also have sort of instructions going on by the government to major Indian ports on how to uniformly provide support for all these Indian cargo ships. You also have a lot of meetings that have taken place by the RBI with large banks, including SBI. They've asked for branches in the affected regions to stay operational and to work from home to sort of help in continuation and normalcy of operations. So the government taking a very detailed sort of step and a detailed approach towards taking views from all stakeholders involved, and we'll continue tracking this situation out of the Middle East.
All right, Rishabh, thanks so much for all those details. Now let's talk about the war. It's day 7 of Iran's war with the US and Israel. Now, the conflict intensified further today with Israel launching new strikes on Beirut, targeting the Iran-backed Hezbollah positions, dragging Lebanon deeper into the widening war. Now, the explosions rocked parts of the Lebanese capital as Israel announced what it called a next phase in the operations. Now, Iran continued its retaliatory barrage with reports of missiles targeting Bahrain, including the strikes on a hotel and residential building in Manama. Sirens and blasts were heard in Tel Aviv overnight, where Iranian clusters' munitions lit up the night sky. Israel's Iron Dome and other systems intercepted many, though some impacts caused fires, including a major warehouse blaze in Beirut, with no reports of casualties. All right, so that's the word coming in and the latest in the war. And President of the United States, Donald Trump, is in his most recent comments on the Iran war highlighted that American forces are destroying more of Iran's missiles and drone capabilities every hour in ways no one thought possible. And Trump claimed that Iran's navy is completely gone, with 24 ships destroyed in just 3 days. Listen in.
We're destroying more of Iran's missiles and drone capability every single hour. knocking them out like nobody thought was possible. As soon as they set off a missile, within 4 minutes, the launcher gets hit. They don't know what's happening. But we have the greatest military anywhere in the world. Their Navy is gone. 24 ships in 3 days. That's a lot of ships. Their anti-aircraft weapons are gone. So they have no air force. They have no air defense. All of their airplanes are gone. Their communications are gone. Missiles are gone. Launches are gone.
All right, let's take it back to business and to an NDTV Profit exclusive story. The Railway Ministry is planning to merge two of its PSUs, which are Ircon International and Rail Vikas Nigam. While both companies have denied from having any information on such talks, let's get in my colleague Rishabh Bhatnagar to explain what this potential merger could really mean for the railway space. Rishabh.
Right, what we're picking up when it comes to a big potential merger in the railways PSU sector, what we're picking up is that Ircon and RVNL, Rail Vikas Nigam Limited, will be the two companies that are in fray for a potential merger. A proposal is currently with the Ministry of Railways that is being considered, that is being assessed. What will happen once or if these companies are merged is potentially a very large, more powerful infrastructure player in India's railway sector. You have RVNL, that is more of a domestic biggie when it comes to this sector, but Ircon also has a lot of international experience in international markets. So a combination of these two, the strengths of these two matching, will prove to be a much more powerful railways infra player. What we're picking up is that this proposal also came to light when the Railway Board essentially asked for a delay in the appointment of the chairman of Ircon. So that brought to highlight the fact that there is a proposal that is underway that is considering the merger of these two companies. What both these companies have said on the exchanges, though, is that they are not aware of any such proposal. So we'll keep tracking this potentially very large merger that is on the cards.
All right. Thanks, Rishabh, for getting us all those important details. Moving on, the dealer channel checks suggest to NDTV Profit that air conditioner companies are opting for price hikes to pass on the higher input costs at their end. In fact, my colleague Ridhima joins in with all the details. Ridhima, tell us.
So this summer's ACs have gotten more expensive. LG Electronics and Hitachi have already increased the prices of their ACs by 5 to 7% is what our dealers are telling us. And the other companies like Blue Star and Voltas are also likely to increase the AC prices in the coming 3 to 10 days is what the dealers have told us. Dealers have also told us that they've already started stocking in more inventory anticipating a higher demand. And the companies are basically doing this because they're likely passing on the higher input costs to the customers. Now remember that GST was cut on AC in September last year from 28% to 18%. And in our conversation in the month of February this year with B. Thiagarajan, who's the MD of Blue Star, he had guided that the AC prices will be hiked from 10 to 15% in the coming time. And now if you were to understand why the AC prices are rising, firstly, the reason is the Middle East conflict, which has put pressure on the supply chain. And because of that, and not just this, even the rupee weakening has put a pressure on the AC companies because a lot of parts used in the AC are imported. So any weakening of the currency puts a pressure on the margins for the company. And thirdly, the copper surge, which has happened even before the conflict, which is one of the input materials used in the AC. The surge in that price has put pressure on the manufacturing costs for the ACs. And IMD had also come up with a weather report that this summer is going to be very harsh in between March to May, so the companies could have figured out and put the cost in increasing the prices for the AC. And also energy efficient norms which the government has been pushing, where they have to use better technology in ACs and use better technicians in these companies, so that could have led to increase the price. And now when will the other companies also increase the price? That is something to wait and watch.
All right, Ridhima, very pertinent story as the summers really come in. All right, so that's an important development. While today we are celebrating International Women's Day here in the studios, we are bringing you voices of women who are shaping India Inc., leaders, founders and change makers, speaking about the opportunities and representation and the road ahead. Let's listen in.
I would say stop asking for permission. You don't need it from anyone really. Like, you just need to look at yourself and decide this is what you want to do and not let yourself be held back. And I think it's a very female thing to seek consensus, to seek support. As I said earlier, you need to be enabled. Yes, that's true. But to also seek that enablement. But that doesn't mean it can't be done.
Each woman who's reached a level needs to think of it as a moment of privilege that she's able to go and give back and mentor other girls and say, look, I know this is a tough time, your babies just come and the work sort of propel, but I think you need to just share your own stories candidly, mentor other young girls and ensure that they stay in the workforce, because as a country we benefit a lot with women coming into the workforce and staying in the workforce, right? So I think it's a great point to raise that each one of us should take this as a moment to give back.
Women are the same in the way that there has been an evolution even in the confidence of women. But the society, the way it supports a man when he pursues a journey like this is not the way a woman is supported at all. So that I would certainly say is a change that has still not happened for the better. And this somewhere impacts women's internal confidence as part of this journey. But I am seeing this younger generation, whether it's male or female, certainly emerging with a lot more confidence than even our generation had. And that's helping women along the way.
That let us all dare to dream. I think we occupy half the sky and we need to get equal opportunity in all areas of life. And today, I think with what I'm seeing, not just in India, but all over the world, I think our time has come. So just all of us need to really be confident and play and learn to, let's dare to dream. And I do feel that our life should be about us. Let the spotlight of your life be on you. And with that empowerment, let's all go out and conquer this world.
NDTV Profit women, building their own power. From server room code to the studio's final hour. Fire in her eyes.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode sing girl, sing girl, sing girl, sing girl, sing girl, sing girl. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. We get a lot of love from our viewers, especially on the new age companies which are getting listed, to get them ASAP on KYC as well. So of course, we are continuing that trend as well. There is a hint to it, but I'll give you the company's name a bit later. Let's just see what are the hints which the company is going to come today at KYC. The company is offering software solutions for loyalty programs. So there is a niche play here, maybe a SaaS product or a solution company. That stock is down 11% from the IPO price as well. And in this pre-IPO rounds, or the anchor investors backed by ValueQuest and Amundi as well. So big, large investors are definitely there in this. But I'll give you a little bit more hint about it. The company's name, the initial name is very interesting. I googled a little bit because I'm a bit weak in biology. Capillary, that's the name I'm talking about. This is just a small tube which transports blood. Interesting name and interesting company to talk about. But it's just not the name we get a company in KYC. There are a lot of questions which arises from my analysis and also from a lot of feedback from you all. So let's see what are the questions which we need to ask. The 5-year strategic deal they have secured recently from a US client. It's a big deal, $20 million. What are the key details about it? What are the contours about it? The $20 million acquisition they have started, and that is for the MasterCard arm. Remember, the company is focusing on a lot in the merger acquisition strategy also. That's an interesting model, but will the Indian markets accept this kind of model and give the valuations? That's what something time will suggest. Any threat coming in from the larger AI players, because the day anything comes from Claude or Anthropic, most of the SaaS players start getting derated. Is that company actually AI proof? That's the question. Inquiries and demand trends for 2026, how things are looking up, and the geographical revenue breakup also. We'll ask the management how things are moving and what is leading to that. Also, another question to be asked is the overall net revenue retention and the margin guidance going ahead. It's a bit technical, but I'll give you all the definitions so that your analysis is very simple, and that's my job to get that for you. The status on the migrations of this acquisition accounts, it's very simple. जो merger acquisition company का किया है उसको core business में लाना है. How do they do that and by when do they do that? At least the return should be maintained for the investors. And to give us all these details about the company and solve all our queries, we'll be joined by Anish Reddy. He's the founder and CEO at Capillary Tech on the show. But let's give it more details about the company. थोड़ा सा technical लग रहा होगा, but I will simplify it for you. अब let's see what's that company all about. First thing is it was founded in 2012. It's a software product company. Of course, you can add AI, SaaS. This is what my technical folks would understand. But to put in perspective, it just provides enterprise customers for loyalty programs. This can be end-to-end. So it's a pretty much niche area, but nevertheless it's growing because corporates are growing, quantification is growing, and this is an important growing segment as well. Let's talk about the other details also. क्या company करता है? Advanced loyalty management, connected engagement, predictive analytics. So basically it becomes a flywheel. One service is there, another service is connected to it, and eventually monetization also happens. And this is how you build a tech product stack, and that's where I think there is a moat in this company. Customers, 115 of them, good Fortune 500, 20 of them are there, and roughly 47 countries the company is present in. So it is growing, it's growing in a niche segment. Let's see if we can actually defend its valuations, because there's a merger acquisition play always there. Just look at the bigger names. Indian names also includes Aditya Birla Group. Internationally, there's Domino's, Puma, Abbott, all these are the major clients for Capillary Tech, but definitely they have a major share coming from the abroad. 89% revenue comes from subscription. So this is very much important, and most of the legacy contracts also the company is focusing on is to make it in the subscription model. That is where the definition starts coming in, those numbers like ARR, MRR. I'll explain you that. There's nothing big concern about it. But recently there's a big US order win. That's also one of the reasons we are getting this company to understand about this important order win. This is roughly $20 billion, but देखिए 5 साल का है. So divided into $4 million. So that is what I want to explain you. Whenever a company announces such a big order, take it with a pinch of salt. There's an acquisition also at play, a US company acquisition. They have acquired MasterCard's arm Session M. So we'll understand how much this acquisition is going to start putting in the benefit. It's also $20 million, but something which I really liked about this acquisition is at the price which has been done. Valuation kya tha acquisition ka? And of course this is the company I'm talking about, but the price to sales ratio is just 0.4 times of this acquisition. That is actually lower than what actually they have given. Almost 0.5 to 1.5 is the target. So this is a very cheap acquisition for them. That means it is going right when it comes to their business strategy of mergers and acquisitions. But when you understand this segment, you should understand कि ये definition क्या है. So I'll simplify it more for you. NRR means net revenue retention. That is important when you track this company. M&A, merger, acquisition, every 5 minutes you are going to be hearing a lot about this because the company's business model is as such. And ARR, this is nothing but the annual recurring revenue. This is what we'll be talking about. So एक revision आप कर लीजिए. This is important. Now let's move on to the story about the company. Earn a net revenue retention, organic business, which is their core business, it's 115%. Keep on acquiring, that is 96%. I checked with a technical analyst and they told 120% should be an ideal target if the company is growing at a strong level. So company is at par or slightly below par with that net revenue for a SaaS loyalty player. But there are a lot of questions to be asked. Of course, the second question is there any threat coming from AI for this model? And if yes, is the company making any guardrail for it? And will this business model of merger acquisition put the strain on the financials? Because if the company is continuously at play with mergers and acquisitions, you will see pressure on the return ratios, at times even balance sheet as well. But enough of questions, let's start finding the answers. So the answers first we need to find is from the rating parameters which we judge a company in KYC. This is the basic income, balance sheet, cash flow, holy grail of numbers to talk about. Return ratios, very much important. But remember, the business model is a bit different, so there might be a bit pressure. And that is why, to balance things out, I have actually interestingly removed the valuations and the peer analysis. The peer analysis is not there. Operational parameters would be fair to judge a company at this stage of the business cycle. Shareholding street cred, yaad rakhiye, it is a very small. It's recently listed in November, तो आपको सिर्फ एक क्वार्टर का ही डेटा मिलेगा. And outlook, is it very much important for both organic and inorganic business? We'll get you all those details in a simplified manner. But let's talk about the first rating parameter, and that's the income statement. And that is where a little bit of my concern comes. See, the top line is going good. It's almost doubled from FY23 and it's around 600 odd crores in FY25. We're going to check the Q3 numbers also, but the bottom line numbers, because the company is in a growth model, but the situation which has come in, the perception of a SaaS company, what has come in, if the profits don't come, the markets may not reward you as yet. And the Q3 numbers also, let's look at it, how things have moved. It has been largely a flattish move. I've taken these numbers on a year-on-year basis. The market also needs to understand. In terms of profitability, little bit up move definitely has come. It's around 8 odd crore rupees. The adjusted margin is something which the company claims that it's doing really well. That'll be very interesting to understand how to study this segment. This is the calculated margins, by the way. So top line, there might be a good growth if you look at the long-term basis. Short-term Q3 numbers, nothing much greater, but of course the PAT number, that is something which has done well. But will it continue or not? That's the question. And that is why I've given a neutral rating. Let's talk about balance sheet, how things are actually moving in this space. And balance sheet also, largely remember, company has come out with its IPO and the equity base has kind of increased going ahead. The debt numbers, if I talk about it, the borrowing, that has actually slightly gone up as well, and it will be very not a challenge, but I would say a tough ask, the way companies doing mergers and acquisitions. That is where we can see that the company will be actually looking out for. Almost 214 crore cash balance also, that's decent for these inorganic acquisitions, but the balance sheet management will be the clear test. So it's a neutral rating when it comes to the balance sheet. But because of the lumpiness which comes in, and there's also merger and acquisition at play, so it's just not the operating cash flows to look at, because that is actually on the lower side as well. But the net P&L, that's on the higher side, and the net flows are still positive. But jitna financing, investing chalega, it will definitely impact your operating cash flows. So the net cash flows will always be very volatile for a business model which Capillary Tech is actually going through. So it's a neutral rating over here also. So all of the three bigger numbers which I talk about it, there is some good point, there is some overhang, and that's why we are stuck at neutral rating. Also, let's point out the fourth category to talk about, and this is definitely going to be this return ratios, but this is the equity base. There's a significant increase in that. That's what the company has stated. From company side, it is a stable move, but single digit ROE numbers or the ROC numbers which you talk about, which the company itself has stated, it is still looking dismal. It takes time for this kind of a model to actually give you the actual ROE or ROC number, or maybe there is another criteria where we can judge the company on these return ratios. It takes time for the Indian markets to understand it, and even at the business cycle which company is there. So as of now, it's a thumbs down when it comes to the return ratios. Let's also talk about the shareholding. In shareholding, promoters have a decent stake of 52%, and I must say that good DIs and FIs have been there over here, and 26% from public. The history is small, so let's be fair. Let's give it a neutral rating and move on fast to the street cred. Remember the IPO numbers, the company came out in the month of November. That means देखा जाए तो सिर्फ 2.5 से 3 महीना ही हुआ है. उसमें from the IPO price, the stock is down 11%. From the listing price also, stock is down 10%. Remember, this time there was a lot of volatility in the global markets, small cap indices, everyone did actually weak as well. But nevertheless, on the street cred, as of now, if you are in the IPO, it's largely, you could say, the price is down 10% odd. After the IPO also, money hasn't been made yet. So for that basis, I have given a thumbs down when it comes to the street cred. But I have given one more important change in the rating parameter. I haven't taken valuations, I haven't taken peer analysis. To be fair, these companies need to be seen in their operational parameters also. आपको मैंने definition पहले बता दिया था net revenue retention के बारे में. FY24, FY25. So these are the numbers I talk about, and 121% is definitely a decent growth coming in for this net revenue retention. This simply means like your customer is there and they are retained, and that revenue keeps on coming in. So it becomes not a perpetuity but a long-term kind of a revenue recognition numbers which this startup or now a listed company is following. So as of now, operational parameters is strong. It's a thumbs up when it comes to the operational parameters. But let's also look at the outlook, how things are panning out. 20% organic annual growth rate they're talking about. This is likely the top line growth. 2 times non-cost of goods sold cost. That is something which the company has mentioned, but at times the clarity doesn't come, even for me. So we'll definitely ask the company what this guidance is actually all about. The platform usage and the inflationary increases, that's also coming in at times. It becomes a cause of concern, and the product upgrades, service upsell, and the new brands, that is what the company is focusing on going ahead in the future. A stronger merger acquisition strategy, that's what we have seen. They are buying things cheap, something which is ancillary to the business model. But the question remains is customers कब migrate होंगे नए acquired business से core business में. That's the entire philosophy, to put it in a very simple manner for you. 75% of this revenue retention for this inorganic business I'm talking about, and 45% free cash flow would be coming in. Both will be, of course, integrated, and then we'll move ahead with it. But a lot of calculation, a lot of maths is there, and I'm trying to simplify it for you, and we will ask the management the entire setup. So right now, it's a neutral rating when it comes to the overall outlook. But let's add up the entire ratings and see where does the company stand and what the company needs to do more for the stakeholders. income statement, balance sheet, cash flow, there is something positive, but there's an overhang. We ensured that for you. Return ratios at this business stage model, don't expect that. Shareholding street cred, I would just say it's just been 2 months of total data. So let's be fair in our analysis on that. Operational parameters is good. That's where the growth is coming in. But outlook, there is of course growth coming for both organic and inorganic. But as the technology changes, does it impact the SaaS segment a bit, on the negative side? So that's a question mark. So we have kept it 3.5 out of 8 totally for Capillary Tech. And definitely we'll ask more questions about the company from Anish Reddy. He's the founder and CEO at Capillary Tech. But I want to give you some important flavor about him. He has almost 2 decades of experience in tech, and not only that, he's an angel investor and mentor to a lot of SaaS startups. Maybe from his mentorship we can get more listed companies in this space as well, and education from IIT Kharagpur. So joining us is Anish Reddy, the founder and CEO at Capillary Tech. Good afternoon, Anish. Always a pleasure to have you here in our show. But Anish, just like to talk about the deals and the mergers, acquisitions, more than the company from the IPO. A lot of news flows are coming regarding the deal wins, regarding acquisitions. I want to start with that, especially with this 5-year deal win which has come in. And if you could just give us, when can the incremental benefit starts coming in and how are the inquiries looking like?
Sharad, thanks for having me on the call. Really appreciate it. I think it's just been 3 months since we listed. So really grateful to all the shareholders for having the confidence in us, right? So I think the business has been doing phenomenally well, which is why the news and all that stuff. We're usually a media shy thing, but I think once you list, you have to put all of this out regulatorily, right? So whether it's the acquisitions, whether it's the large deal wins. So this one is, the one on the screen now is a very large Fortune 50 retailer in the US. It's a $20 million deal over 5 years. Actually, it's a longer term deal. You can keep adding. There's another chance for them to extend another 4 years if they want to, right? So it's it could be more than 5 years as well. And it is really one of the top 5 retailers in the US, right? So very, very good firm there. They really liked our loyalty and our AI stack. Now, this is an organic customer. Usually our customers take about 5-6 months to go live, but they start paying us from the day they sign, right? So you will start seeing this entire revenue, the 4-5 million increase per annual increase, right? You would see that play in over the next, I'd say 6 to 9 months. You will see the entire thing play out. So at least compared to where we are, I'd say at least a 5-6% of growth just from this single contract. You will see it play out, right? In by probably 6 months from now, right? So yeah.
All right. So that's a very interesting take from Anish. It can be an extension, 5 saal plus 4 saal, 9 saal. Interesting, and of course a good contribution in the revenue as well. But apart from the deal acquisitions, that is something which I might say is one of the core principles of your expansion plan as well. And there is a acquisition of $20 million coming in for MasterCard's arm. It's a Session M. But the thing which I'd like to congratulate Anish you is on the deal valuation. It's happening at 0.4 times, and you have given a rating that the deal should be between 0.5 to 1.5 times. So can we get all these suppressed deals in this acquisition pipeline for 2026? Anything else looking good here?
Yeah, so let me talk about first our acquisition strategy a bit, Sharad. So we buy only loyalty companies. We only buy our competitors, right? So, and the reason for that is, that the risk on product is much lower, right? And if you look at the Capillary product, we are rated the best globally by any analyst. So if you pick a Forrester or Forrester is a large analyst in the West, US, Europe, etc. And they publish a report every 18 months on the loyalty space, which are the best companies. And for the last couple of years, we are rated right at the top, right? So we are the best company rated there. Now for a MasterCard, they had this product. They have a lot of good customers, who also work with them on the payment side, right? So for them, it was more about finding the best home for those customers that product, right? So it was not as much, Capillary se kitna paisa banayenge, right? How much money will they make from Capillary? So their analysis was more saying, we have to do the right thing for our customers and find the best company that we can give this to, right? So which is why and MasterCard is a great company, right? It is in the top 25 most valuable companies globally. They've always done the right thing for their customers. So this is the pricing is something you should not really take that seriously, for that reason that that they wanted to find the best home, and we are known to be the best product in the space, right? So we work with 25 of the Fortune 500 now. We've 2 of the Fortune 10, right? So we do only one thing, we do only loyalty, but we are the best in the world at that, right? So, and that's why that acquisition price and why a large brand like MasterCard would sell it to us. Look at it, it's an interesting time.
Right.
Will we do more acquisitions? I don't know, right. But you can assume that the deal values will be in that 0.5 times to 1 times type.
Yes, Anish, that we have seen, and maybe you have a bargaining power. That's why you get things cheap as well. But Anish, a question is, of course, you're a mentor also to a lot of folks in the SaaS industries. But this question always comes, and a lot of viewers who track the IT space or the product space ask me, the AI impact, if any impact or a plugin comes in from Claude or an Anthropic, does it impact a SaaS player like you? Because you yourself are an advocate of AI. I've heard you in a lot of events also. But Anish, just wanted to understand regarding AI, and is it a friend or a foe for your company? And if yes, how are you implementing it, or any impact we can see? What is that entire, air about?
Right. Yeah, so if you look at this large retailer who's bought from us, they've bought loyalty and they've bought our AI stack, right? Now that's also in the press release if you see that. So AI for us is not all software companies will benefit from AI or will lose from AI, right? So we are a system of record, right? All the customer data sits with us. The ledger on how many points, milestones, rewards, your tier, all of that in your loyalty piece also sits with us, right? So we are a little bit of a system of record for both the customer data and for all the your points and all of that, right? So usually for a system of record, I think AI is a net benefit, because what will happen is system of records can become more smarter system of records using AI and displace like systems of workflow and systems of intelligence. Jaise ki, like, pehle kya hota tha ki, you would have these analytics agencies who would take data out from us. We would pipe data out to them for these large enterprises, and they would run these analytics for them, charge them separately, right? Now AI can do that analyst wala work, right? It can actually sit down, and especially you can have a small language model, or you can have a bunch of RAGs where you're training the AI to say, "Kisne agar ye problem bataya aapko,
right?
So this is how you solve it," right?
Anish,
so for us,
exactly. So
that has a benefit.
Yes, Anish, but just to put in terms of a simple analysis or just an outlook going ahead, because you have given organic, inorganic. It's a bit technical for even me to make my audience understand. Just to put it in simplified manner, overall consolidated revenue growth and the margin growth, if you could give us any numbers next 2 to 3 years, what will happen? Because I know a lot of merger acquisition is happening, so it's not fair for me to judge the company on return ratios or bottom line numbers. But agar adjusted EBITDA margin kya ho sakta hai 2-3 saal mein, maybe you can give a feel.
Right. So let me break that a little bit for you, right? So if you look at us, last 3 years, we've had a 50% plus CAGR of growth, right? Last 3 years. Now, about half of that has come from organic, half has come from acquisitions, right? So basically what we're saying is, even looking forward from this from the 598 crores that you see there, we will continue to grow 20% plus even if we don't do acquisitions, right? So, and of course, this is a big acquisition. It adds 35 million of revenues to the company. So वो सब आपकी growth में ज़्यादा आएगा, right? So you will end up growing a little bit more than 20%, शायद 30 or शायद 40 हो, basis whatever the inorganic number you're seeing, right? So Now, again, if you look at EBITDA and the number to look at for Capillary is actually kitna cash hum log generate kar, right? So the business generates a lot of cash. Agar aap dekho to the first 9 months, we generated 100 crores of cash, like hard cash, right? On revenues of, I think 560 something crores, right? 500 and like around that, right? So it is when it comes to net profit, there is depreciation for acquisitions you've done in the past, right? There's amortization for them. There is a lot of that, right? So which is actually non-cash expenses. So a good way to look at Capillary actually is more a cash ROIC.
Yes.
So
cash, yes. So Anish, the thing is, cash ROIC is something which all our viewers, if you're understanding, please track that for the company. And also, without acquisition, it's a 20% plus growth coming in. But Anish, last question to you. This migration, the acquisition account, कोई धंधा आप खरीदते हैं, फिर वो धंधा जो है, it moves to your core business. How much time generally does it take for this? And right now you just did an acquisition. So if you could just give us some flavor of that.
Yeah, Sharan, so we've done 5 acquisitions over the last 4 years. So roughly, I would say a third of our revenue, we are today at a 750 crore run rate, right? If you take the 184 into 4 roughly, right? So a third of our revenue has come from acquisitions in the past. So 3 of those acquisitions are fully migrated, right? Wo customers have moved over, we make like a 45% free cash margin on each of those customers who have moved over. So it's usually I would say like a 12 to a 24 month cycle. Not everyone migrates at the same time.
Okay, Anish. So that's a very important data you mentioned, 12 to 24 months. That's a very interesting take on it. Thanks a lot, Anish, for taking out your time. We are out of time right now, but you have given a very interesting picture and cleared a lot of air regarding your company and its strategy going ahead. It's always a pleasure to talk with you, Anish, and we'll get back to you for more. So that's the management of Capillary Tech talking about their growth strategies and also clearing a lot of air, which there was a bit of confusion post the IPO as well. So, and that's what we do in KYC. Stay tuned to NDTV Profit for more action.
NDTV Profit women, building their own power. From server room code to the studio's final hour. Fire in her eyes, numbers don't lie. From the PCR to sales floors, watch the targets fly. Don't call it empowerment, that's just talk. This is work, this is grit, this is the walk. No handouts, no favors, no borrowed tone. She built her own damn throne. NDTV Profit for her profit.
The stage that brings together India's most compelling creative voices.
एनडीटीवी का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
इट्स ओके यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज करता हूँ।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode jingle, 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 jingle. Kyunki tu hai jingle, 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 jingle. Baby, I'm your Santa.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
War. You've seen the headlines, the massive conflagration that took place when the US and Israel decided to strike Iran. When it comes to geopolitical disruption, though, this is nothing new. Over the past few years, you've seen the Russia-Ukraine war and the Israel-Hamas conflict. But this event has struck closer to home. And the reason is fairly obvious: crude oil and India's dependence on the West Asia region. The effect would have been visible in your portfolios. Now, I know that this is a developing story, so we're not going to talk about specific events that have unfolded so far. We'll instead talk about why this conflict is different from the others in the recent past and what your response to geopolitical crises should be. In the recent past, a lot of you would have looked to diversify your investments abroad. How does this affect you? Is it better to do nothing? Because this is a pretty underutilized response. Or should you adjust your strategy? And how should you do it if that is the case? Join me to talk about this is Kirtan Shah, the founder and Chief Executive Officer of Truvanta Wealth. Kirtan, thanks so much for taking the time.
Alex, thank you so much for having me as always.
So, underrated response is to do nothing. Do you see people utilizing it?
I think a better response is to be able to buy the fall, because historically, if you go back and see for the last 26, 27 years since the 1999 Kargil war, I think all wars have been a great opportunity. And I'm sorry I'm saying this, but this is only in context to investments, right?
Yeah.
I have some data, and because it is too much, so I'll have to read through from the phone. So I've done some homework. When the 1999 Kargil war happened, the peak drawdown for Nifty was 6%, but 1 year later, and I'm talking about peak that it achieved, was 29% positive returns.
From the low to the peak.
From the low to the peak. March 2003, the Iraq war, again Nifty was down 5% at peak drawdown, but at peak rise, it was up 71% a year later. You look at March 2014, again Russia, Ukraine, same, Nifty was down 2%, and a year later, at the peak, it was up 38%.
Wow.
You look at Feb 22, again Russia, Ukraine, was down 12%. It recovered that 12% and was up 4% in the next 1 year. October 23, Israel, Hamas, you made a mention, 3% down at peak, and 1 year later up 26% at peak. And India, Pakistan, that happened the last year, right? Down 5% at peak, and we are still, at the time of recording this, we are still up 2% over last year after having recovered the 5%.
Interesting. So we've recovered. So buy the dip is the answer, but of course, it depends on the scenario as well, right? And this situation, you haven't had a conflagration like this in the Middle East or West Asia from our perspective in a very long time. It's the largest such situation in this century. So what is at play right now from what you've looked at? And neither of us are geopolitical experts, let's put it out there. But from the perspective of the Indian investor and the advice that you've been giving to people as well, that is based on certain reading. How are you reading this?
I think a very interesting question, and I have some data points that I can share with you. Look, the only problem that we see in this war is oil, right? Because the Strait of Hormuz and various other things at play, taking care of 20% of the seaborne oil that passes through that narrow canal. And crude we've already seen go up. At the time that you and I are recording, I think crude already is at 83.5,
yeah.
Right? But let's take a step back. In 2007-8, our GDP was roughly $1.16 trillion. Our oil import bill was close to $38 $68 billion. That is roughly 6% of our GDP. Today, in FY26, the estimates are that we'll close our GDP numbers at $4.2 trillion. And our import bill is $120 billion. That's 3%. So versus 2007-8, as of today, our import bill versus the GDP has drastically gone down. So the impact is not going to be very significant, point one. Let me give you a recent past example. If I take you back to Feb and March of 2022 specifically, crude went up from 77 to 139, which if I'm not wrong was a 14-year high for crude at that point in time. Nifty corrected close to 5% that time. So the point that I'm trying to make is, yes, crude is a big impact on India. And the assumption is that if crude prices go up, stay up, it'll increase inflation, and hence you might not be able to do a lot on the macro factors. But if you look at today, our WPI is close to zero. So even if inflation goes up, it's not really a very big challenge. 1.25% rate cut has already happened the last year. And I don't see a reason why immediately rates will start going up, even if crude stays where it is at an elevated level. So I think all of these data points put together, I think looks like an interesting opportunity, and it does not really give us any discomfort as to why should you not buy lowers. Because if you look at India equities, from a valuation standpoint also, it's become much better than it was.
I was going to ask you, because we've reached this juncture where, again, at the time of recording this, you have the Nifty 50 at close to 24,800, right? And so we've recovered from the low point already. The question that I have is that it's been a pretty torrid last 12 to 14 to 16 months, right? The equity markets in India have done practically nothing. And just at a time when, at the start of 2026, you were looking at a situation where fundamentals in India were changing, the argument that valuations are stretched in the broader markets was getting a little softer, if anything. And we were poised to see green shoots and things improving. At that time, this thing has come about. So it's not been very long since the conflict started. So therefore, would you say that the argument to double down on India has gotten louder?
I'll give you a slightly longer answer.
Yes, please.
So what has happened over the last 18 months, to be very specific? You saw the global markets go up. India didn't do anything, right? Point one is for us to understand, why did India not do well? India did not do well is because valuations were pretty high. And we'll have to accept that fact that the valuation was high.
It is true.
And it was cheaper globally, which is why FII sold and took monies away.
And this is because of post-COVID, whatever we did.
Absolutely right. Also at the same time, we've actually not have had a negative year since 2015. So look at it in context that each year since 2016, you've been giving positive returns. So if at the end of the 10th or the 11th year also, you've actually not drawn a -10 or a -12, in itself is a big win, right? That's one. But comparatively, where we were 18 months back versus where we are today, our 10-year premium to EM markets has become zero now. We are exactly where we would have otherwise been if there was no premium versus the EM market.
Explain this. So some people will listen to this and they'll be like, yeah, that's cool. But explain why this is significant.
So again, last 18 months data. Nifty is down 5%. You see the PE at Nifty down 10% from the high, and EPS is up 6%. So now this is the Nifty equation, which means that while over the last 18 months your stock market did not do well, it fell 5%.
Yeah. So, but just to drive home that point, I want to make sure that everybody understands what this means, right? So while what you're saying is that the price to earnings ratio is down 10% from the peak, at the same time, the earnings per share, which is a part of that price to earnings calculation, has gone up. So a price to earnings multiple can go down for two reasons. Either you will have a situation where prices go down, or you have a situation where earnings goes up significantly. Both of those things have happened.
Absolutely. Not just the Nifty 50. I think Edelweiss MF shared a very interesting data point for mid and small as well. In mid caps have fallen 4%, but the price earnings, PE is down 30%. and EPS is up 35%. Right? Mad. Look at small caps, down 15%, P is down 25%, EPS is up 10%. So now we are in a situation where we are saying for the last 15-18 months we've time corrected. Our valuations versus EM have lost our premium for the last 10 years. I mean, we always traded at a premium to the emerging markets, but now because emerging markets have done so well and India has not done so well, that premium has vanished from a 10-year average perspective. I see no reason why you shouldn't or you wouldn't want to double down, right? Because the war data that we discussed, the oil data that we discussed, the valuations that we are discussing, I think all of that is panning towards making sure that if you have 3-4 years, 5 years of investment horizon, of course, be okay with volatility given the situation that we are in, and depends on where what is Trump doing every second day. But I think it's a great entry point given where we stand from an India standpoint for sure.
Okay, so let me ask you this question, right? And we'll come to what a new investor should do as well. Looking at the screens right now, there'll be a little bit of maybe opportunism. There'll be also on the other side a little bit of trepidation to say that, oh, markets are so volatile, what do I do? So over the last several months, I've been looking at updates on social media where a lot of people are exhorting Indian investors to look overseas and to say diversify, diversify, diversify. And I have constantly felt that while it is a good idea to diversify, some of those calls might have been a little too aggressive. The reason why I'm thinking about this is that you've had a situation where you've been curtailed on account of the RBI as well as the SEBI. Yeah. You can't invest through mutual funds. You would have had to go through LRS, or the Liberalized Remittance Scheme. And you've seen a lot of these markets go up very, very substantially. Kirtan, you pointed that out. And just over the last week and a half, you've seen the Kospi in South Korea crash through the floor, trading halted, and the next day up 12%. So there is considerable volatility in these markets as well. If you're looking at incremental allocation from this point, would you be more cautious on international as compared to India?
See, I think a theory answer is for you to have 15-20% of your allocation globally.
That's it.
That solves most of your problem, right? There are two reasons why people invest globally. If you and I have to really argue on the point. First is, of course, the rupee depreciation.
Correct.
So if you're invested in the US and the US markets are making you 12%, but the rupee is depreciating by 3%, you will end up making 15% in rupee terms. Good reason for you to diversify globally. Another reason for you to diversify globally is because there are going to be themes that you will not be able to play in India. Like say, for example, we still have a very nascent EV market, AI market, right? And we've seen how probably, because you named Kospi, right? Sure. It went up 100%. Yeah. And largely has happened because 40% of the index is by two stocks.
Samsung is one of them. Yeah. What is the other one? I can't remember.
Is HK... Sure. Something, I mean, I also don't remember the name, but only two stocks hold 40% of our 40% of the index.
And that's not just Kospi, it's concentration across the board, even in the US.
You look at US, the top 7 tech stocks are the reason why 60-70% of the US market returns have been delivered. Yeah. So I think there is so much of concentration to themes that have really played in the global markets. That is enticing a lot of people, but it is very largely like FOMO, right?
It's classic recency bias.
Exactly. You look at gold and silver, and now if you look at the gold and silver rally and you want to invest, probably I'm assuming the story would have already played out, right? Now if you're going to invest in global markets because you've looked at what happened in the last 1 or 2 years globally, I think you are very late in terms of investing. That's one. Second, also that people have to understand is, outside of the US markets, how many of us really even understand or know of companies? You ask me which was the second company, I don't even know the second company.
And you're tracking the space, right?
Yeah, and I'm tracking the space. Not that I don't know, it's just that I can't remember it right now. But that's the whole point. I mean, if you're going to invest in Latin America because it generated 50% returns over the last 1 year.
Yeah. And Brazil has...
Name 3 companies that people know of, right? So don't get carried away. Sure. Just because some markets have delivered return. I think having an India exposure And outside of India, around 15-20%, specifically in the US, largely solves your problem because US will end up playing most of these themes for you, and at the same time will pay you for the rupee depreciation. Of course, we can argue why not China. The problem with China is that, you know, while the per capita is growing, GDP is growing, it's not translating into stock market profits.
Yeah.
In spite of the last 1 year being, let's say, 25% kind of returns, over the last 5 years, it is still 4.5% CAGR.
And there are certain problems that they continue to have. The whole anti-involution piece, the massive capacity in their factories and not utilizing it. Their demographic dividend is gone completely out of whack. A lot of older people there now.
Absolutely, and which is why, you know, people in this space typically keep saying that, you know, like I quoted, GDP going up, per capita going up is okay, but is the ROE, ROC really translating into stock price return? The answer is no. So while you do global investing, I would rather urge people to stick to geographies that they understand, names of the stocks that they've heard of, instead of trying to do something just because it has moved up in the past. Because first, you have very limited options available to explore that market. Second, there is too much of ambiguity in terms of paperwork, taxation. And
what is your preferred route if you were to invest abroad? How do you go about it?
Technically, you do it through ETFs, but the problem is, like you rightly pointed out, RBI, SEBI has blocked the limit because at the industry level it was 7 billion. It's already been taken care of since a long time. If I'm not wrong, since 2020 to 23,
it's not moved. They've
not opened, and hence ETFs are trading at a price
premium
much higher.
To NAV, premium to
you can actually use the GIFT City route, but also, again, like I said, there are very limited options available in the GIFT City route also.
But they're growing now.
They are growing, and of course, I will not be surprised that over the next 4 or 5 years, you will have a very large pool of funds who would, kind of set up base in the GIFT City, and they will give you exposure to do investments globally through GIFT City. But as of today, that you and I talk, these options are not available.
I must also, sorry, you're making a point.
And even if these options are available, I would still stick to the whole point that we discussed, right? That you want to invest in the US markets and not probably a Kospi or a Brazil because it has moved up.
Sure. Okay, that's fair. I do want to also ask you about gold, and we've talked about this in fair detail in the past, and I must say that before the entire crazy run took place, we've spoken about gold, right? And you've talked about having an allocation, again, similar argument, 10 to 15%, preferably in gold ETFs or gold mutual funds. At the time, I think we've even spoken about sovereign gold bonds, but it's no longer available. But having said that, we've talked about how this is also a hedge against rupee depreciation, which is incredible, right? So, but incrementally at this point, what should the strategy be? One would assume that with geopolitical tensions so high, gold will continue to have safe haven demand, but it's run up so much.
I think whether or not should you invest in gold at this point in time is a very tricky and a difficult question to answer. I would rather like to flip that question saying that if you heard a stock the last time and you've bought gold,
then it's good.
How long should you continue to hold gold? Right? There are two data points that I would personally look at if I am holding gold today. Right? First is, of course, I want to continue to look at central bank buying, because that's one of the primary reasons why gold really went up. And these data points are available every month and very easily available. And you just Google and you will get the data.
Sure.
So if you see a couple of months where probably a China and an India has not bought gold, that probably can be a red flag for you to, kind of liquidate or trim down your gold positions. And very importantly, I will look at US very specifically in terms of real rates. If real rates in the US go up, probably the gold bets are off the table. I'll explain that.
Real rates.
If you look at 2011 to 13, you look at 2020, and you even look at the past gold rallies. Most gold rallies have failed when real rates in the US have went up. Now, what is real rate?
Yes.
6% is your return, 4% is inflation. So you say 2% is what stays with me.
Sure.
That's really what I'm making.
Yeah.
So let's call that as the real rate. Now, this real rate can move up in two situations. Either your interest rates are moving up. So instead of